Hey guys, Sean from Invest to Live here. So, with the craziness in the markets continuing, I just want to touch on a topic that we covered once before, but I think is going to be really important moving forward, and I want to dig in a little bit more detail here. Real quick point: we know crypto's been going crazy. I think a lot of people are sort of sitting in this place of, what should I do? Is it going up? Is it going down? Should I sell? Should I not sell? And I think that part of the issue here is a lot of the so-called pundits are really nothing more than just newbies to the world of investing and analysis who are sort of learning as they go, which is fine if you're only worried about your own analysis. But it gets scary if people are taking advice from people who don't know what they're talking about, or frankly, I've seen many people who are doing technical analysis the wrong way, or assuming that things that work for equities are going to work for crypto and not understanding the markets in the way they sort of flow differently, or the way money comes in and goes differently. So I wanted to share something I've been looking at lately, using Google Trends to look at some key search terms. I'm going to do this particularly in and around a few areas here from the crypto space, but I think they're pretty interesting nonetheless. So I'm gonna share this here in a second, but I just want to reiterate this again. Like, be careful when you're following someone else's analysis of anything that's going to involve you putting your money into it, or even taking your money out of it, frankly. You have no idea what that person's skill set is. Anyone can go and screenshot a chart and pretend that they predicted things. Anyone can do that. If it's not real time and you're not seeing things happen in real time, there's no way to even know that these things have happened. What actually kicked this entire video off today was I happened to see a video this morning. I will never drop a name, but a very large crypto channel was talking about like what they did a week ago, but telling people about it today. And I was thinking how, like, the absurdity of it, to tell people what you've already done as if it's just like friendly advice to help people who don't know. Like, if you're going to drop these things, you don't necessarily build a purchase around it. You simply let someone know, here's the data I'm seeing, here's what I'm thinking about doing. And maybe that's a bit more of a genuine approach to it, as opposed to doing it and then telling your massive amount of fans or followers that you just did this thing and here's why you did it, knowing what's going to happen in the second half of that. But again, this isn't about calling people out or trying to point finger at anybody. I think everyone's generally not sure what to do or how to treat things in certain ways. So, I've said this before. I'm big into a lot of the realms of the investment sphere. Whether it's equities, bonds, options, futures, real estate. I know forex very well. I understand the interchange between markets. I know finance quite well. I have a professional certification in alternative assets. But crypto is is in and of itself a completely different animal, because these coins all work with lots of different metrics that can be very disparate from one to the other. When you're comparing, just for example, Bitcoin, which has a finite amount, and we can look at things like hash rates and chain analysis against it, and then you're trying to compare those same kind of metrics to, like, in Ethereum that doesn't have a cap. There's room for misinterpretation of the data if you don't know how to correct for that. And I'm not saying anyone has to be an expert. I'm just saying it's important to understand that when you go out and look at what kind of information you're getting on these different asset classes, or these different, coins in this case, you have to look at them as being a piece of your research, an indicator in your research. And that's why I'm going to share my screen in a second here. I think using Google Trends is really, really interesting in the world of meme investing, right? Whether it's cryptos or the Reddit stocks, or just in general, hot topics in the market that people are putting money into. And I think that there's a certain, like, key indicator I look for, and it's interest over time. But especially in and around events, especially in and around big happenings, and then seeing what's going on with pricing from that perspective. So without further ado, I'm going to actually share my screen here. Hopefully I do this right. I screwed up the last time I did it, so we'll see if I get it. Hopefully everyone's seeing my screen here. So this is a really simple Google trend. What I wanted to do was really simple. I just want to look at a trend over a 1 year period of time against search terms for Bitcoin, Ethereum, Cardano, and Doge. What you'll notice here is I'm looking at it in the US. I'm looking at the past 12 months. I don't care about the categorization here, but I'm really tying it directly to YouTube search, because I think that YouTube search And again, completely my opinion. This is not meant to be investment advice. In fact, it is not investment advice, quite literally, but it is not meant to be taken that way in some strange way. I think that YouTube is very actionable. It's a very execution-focused platform. So a person can come on to YouTube and ask questions that are seemingly simple, like, should I buy X asset class? And there'll be 100 videos that basically explain why you should, why you shouldn't. There might be some technical analysis. It could be some fundamental analysis. Could be things like on-chain analysis. But the thing is, we don't know the skill set of the person giving you that advice. I am absolutely in no way saying that the age of a person or what they do for a living impacts their ability to look at a chart and understand it. But I do see people who are, maybe a year or two into their own investments talking about charting as if they've been doing it for 20 years. And I think it's concerning because if you haven't lived through crashes, you may not always understand what looks a certain way, often historically has been completely wrong or misinterpreted, or the signs were taken the wrong way. So that's why I treat this as sort of a first step here. And I'm doing this right now, funny enough, looking at my own portfolio. So let me jump into what I see here and the way I use this as an indicator. And then I'm going to end the video there for the most part, because I don't want to go too deep on this. But I happen to pick 4 of the coins that I keep an eye on. And full disclosure, I do have positions in all 4. There is in no way should you be interpreting this as buying advice or things that you should do, because quite literally, I'm not sure what I'm doing right now. So that's just to be totally clear. So I'm looking at Bitcoin in blue, Ethereum in red, Cardano in yellow, and Doge in green. And I'm looking specifically at the YouTube search because I think that what I want to understand is, are people searching for these terms to get a definition or a website, or are they looking for these on YouTube because they're looking for videos to help explain what they are, where the pricing is going, how to buy them, where to go to buy them, etc. That's the way I treat this. That's my style of indicator analysis. So I look at this, and my approach to it is, people are searching for these terms on YouTube because they're trying to take some sort of an action beyond a basic understanding. That's what drives my analysis of this, and that's when I enter it into my sort of plan, how I treat it from an indicator perspective. So a couple of quick things here if you haven't seen a Google chart before. 100 basically is the peak interest of that topic over time. If it's at 50, it's 50% of that interest level. It's at 0, typically means there's not enough data. So we're looking for like a 1 to 100, 0 meaning just not any data to work on. So a couple of really interesting things here that I want to call out. So as we can see, going back to May 2020, right? No surprises, Bitcoin has been dominant here, but like nothing really going on with Ethereum and Cardano by way of search, very minimal interest. Doge, of course, the fact that it was trading for such teeny tiny amounts, I always think is going to generate some interest, because people are going to start to always have pump videos of, could this 100x or 1000x or get to $10 or whatever the case might be. And for me, those are kind of scammy things. Maybe not on purpose. I'm certainly not saying people do that to be completely on purpose here. But like, if you're looking at Doge a year ago, it's because you're looking for something that potentially could grow really large. Maybe you don't have a ton of money to put into Bitcoin, so you're looking for returns. So again, that's the way I look at it from an indicator perspective. As we go over time here, no surprises. The numbers are pretty much right on the money, right? We see that in the October timeframe, we sort of see this little bit of a jump in Bitcoin. Again, not much, right? But you can start seeing it's rolling a little bit. Ethereum and Cardano hanging steady, Doge hanging steady. Bitcoin's starting to grow over time. This could be because of stimulus checks. This could be because of the timing of the year. People are starting to maybe get end of year bonuses or working towards those, or starting to get to that time of the year where they're at Thanksgiving and the conversations are happening at the dinner table. Could be that the holiday season, people are having conversations around crypto. So again, this is just the many facets of indicators I'm thinking about when I look at a chart like this to understand what it's telling me and what I should do with it. We see a pretty big pop here, though. Let me just get right on it. Very, very early part of the year, we see Bitcoin jump way up, all the way up to an 83 out of 100. Ethereum suddenly pops. Cardano has a small little jump, and Doge is pretty much hanging steady for the most part as well. So again, not a huge surprise here. I expect Bitcoin to whipsaw quite a bit. Interest level seems to wane big time, and then it starts to hit the newswire again. But what's interesting is we start to see some real big movement here off the baseline as we go here. I'm going to ignore Bitcoin for the sake of this analysis, because I'm sort of separating it out in the way that I look at this mentally as being like a unique asset class within the class of coins, because it's the biggest, most well known. So people are always generally going to be searching for that. I think that there's indicators when I dig deeper and I apply this either like from a trend perspective on top of price, or from like a prescriptive perspective against what the indicators are telling me, what has likely happened based on historical data. But for the sake of this here, what I'm looking at now is the bottom three here. We can see that as we start moving a little bit further into the year, into early 2021, Ethereum, Doge starting to jump, and Cardano is coming up off the floor. As we go a little bit further, we can see Cardano gaining interest. Doge still pretty steady, right? Ethereum starting to move, and we're seeing this little thing happen here where we're getting a little bit of like crossing over each other as we go over time. But then what's really interesting for me as someone who looks at these from a data perspective is we get this huge pop in Ether in early May. Now I'm putting this video up May 30th, so of course, there's been a lot going on here. And I think what was happening is Ethereum started getting this huge amount of attention that it could surpass Bitcoin someday. The prices are starting to really scale. People are looking at the value of Ethereum as being the baseline for all of the building. I've even heard of things like future internet. So there's a lot to be had here as far as interest, as far as why people are looking it up. I think Ether also is a bit more complex from a standpoint of it's easy to say things like Bitcoin is a cryptocurrency or an asset class or a store of value. I think with Ethereum, you have to almost get a little bit deeper into it. You need someone to explain what it is. So again, the YouTube searches make sense to me. But along with that comes questions that follow up like, what is Ethereum? How do I invest in Ethereum? How do I buy it? What's its value, et cetera, et cetera. So what I'm really trying to get here is this is a really, really easy thing to do that helps me understand the interest level of searches on YouTube around a couple of key coins that I'm looking at, or I might have in my portfolio in this case. And we can see here, as it stands, quite up to the date of yesterday, Bitcoin's back up to an all-time high. Ethereum is on a downswing, Cardano, Doge on a downswing. And what I did is I went and actually just typed these in to YouTube, right? One by one, just to do a general search on it. And of course, as you can imagine, the amount of information in and around Bitcoin right now is wild. And everyone is basically trying to figure out, how do they buy that Lambo that they thought they were going to have in the beginning of the year? And I see a wide disparate approach to what I'm seeing when I search for Bitcoin. It's videos from it's going to hit 300,000 by the end of the year to JP Morgan says 130 or whatever the numbers that they're saying. And there's other people who are saying 20, and some people are saying 0, it's dead. Then there's lots of comparison videos saying, Ethereum's going to go to the moon. Ethereum's going to surpass Bitcoin. I see things for Doge. Like, of course, we know Doge is all over the map. It follows so closely to the world of tweets that it's almost hard for me to even get metrics on that because it's very unpredictable what's going to come out one day to the next. But I even see things like Cardano or ADA here, which is like, can it get to $10? Can it get to $2? Is now a good time to buy? What's the future look like? And I think that if you're an investor just coming in here for the first time and you just generally don't know what you don't know, this is where you're going to start to do it. So this for me is where I start to grow my level of indication. I know I'm saying this a bunch of times and I'm not doing it by accident. I really want to get the point across that as you think about where you're going to put your money, especially from an investment perspective, and I want to be very, very clear here, in terms of proper portfolio building, there's many different trains of thoughts. There's all kinds of ways of thinking about where to put your money, how to think about retirement, whether that's early retirement or retirement at 65 or 70, whatever the case might be. I get very nervous when I see things like I'm 100% in on crypto or, YOLO and FOMO and getting my Lambo and retiring at 25. Like, man, I'll tell you what, I hear the excitement around that and I get it. But when you look at the way the prices move and the way that you need to have a floor beneath you from a speculation perspective, I just think there's better ways to go about doing it. That said, again, I want to be transparent. I'm a big crypto guy. I got in really, really early. You can't see behind me, but I have my old miners back here. Back in the day when it made sense to do it at home, although it got a temperature in my office here like at about 100 degrees a day. But that being said, in those early days, it was much easier to run with a couple of GPU cards. So anyways, though, my point really comes down to this. Before I make an investment in anything, especially in like this kind of a space here, I'm looking at chain analysis. I'm looking at technical analysis. I'm understanding the fundamentals. I know the core value of blockchain. I understand how blockchain works. I want to understand all the data, how it's moving, the kind of dollar volume. I want to know who's buying where and what kind of support it has. I want to understand resistance levels, retracement levels. I'm not saying you have to do all those things. But what I am saying is, if the way that we decide where to put our money is based on search terms on YouTube, that can be a very scary scenario that can lead you down a path that's going to really hurt you pretty bad here. So I don't know. I guess that's just something I want to share here. Was every time we've been through this, and again, because I've been through a couple cycles now, I've seen it. There's this sort of like consistency around the way these charts change and move over time. And I want to share one other view here as well. Going from the past 12 months to the past 5 years. Come on, there we go. I just want to share this chart because it's actually pretty darn eye-opening. Like where we think things are going wild here with Bitcoin and the interest in and around it. Because on the previous screen, on the 12 months piece, we were peaking at that 100 level again. Going back now 5 years to 2016, which is really a little bit after I got in. Look at this, right? Like, look at the wildness of these things, right? Doge back in 2016 had surpassed everything else from an interest perspective when searching on YouTube. Think about how crazy that is. This isn't just some recent huge jump. When I originally had gotten into Dogecoin back in the day, it was obviously fractions of a penny. So it's not surprising for me to see that this goes up, because when I look at historical data and historical interest, there's patterns, and the patterns keep showing themselves, right? Like humongous spikes of interest here that then sort of come down and come right back up again and then go back down for a while, right? A couple of years go by, it comes back up again, then back down to normal again. And this is the value of looking at anything from a historical perspective over a long period of time. If I look at something over the past couple of days or the past couple of weeks or months, it might tell me a very, very different story than over the past 5 years. And just as a great example of that, we just looked at 5 years. Here's what we started on, was the past 12 months. Excuse me. Let's look just at the past 7 days, right? Look at all the spikes we're seeing just in the past week, levels of interest. And you sort of start to stand back and it's like, wow, depending on the time frame, we can interpret this as a completely different, disparate thing. So that's why it's so, so important to understand the way you look at charts, the way you interpret what they mean, the way you want to leverage these as indicators into your overall strategy. So that's it. I talked even longer than I meant to, but I really want to get this out there. I think it's super, super important that when you look at the way you invest your money, if you get all of your advice from YouTube, which a lot of people do based on these search terms and what's in here, all I'm saying is have some comparative ability to look at all the information you're getting and what that information would have done from a historic perspective, right? Like Bitcoin's down, say, call it 50%. And everyone's saying, well, the floor is in. Well, Bitcoin's crashed down into the 80% range several times. So who's to say we are or aren't at a floor or nowhere near the floor, right? My final thing I want to say here and call it a day is when you decide to get into something, I'm not talking about traders. I'm talking about just someone who's wants to hold for a long term, wants to see it grow, wants to try to build some wealth, no matter what the asset class is. I think you gotta really, especially when you're new, you gotta think about why you're getting into it. When we look at the chain analysis for Bitcoin, especially the past couple of weeks here, the amount of people who jumped in at all-time highs and then sold for huge losses is staggering. It's staggering because you have to feel bad. People have lost huge amounts of money, hard-earned money, trying to get in on something. And look, whether you're trying to get in because you are looking for the next big thing and a huge return, or you're trying to start investing for the first time, it doesn't matter. But if you got in at 60, I just want you to think, like, what made you see that as being the right time to buy, or 55 or 50 or 40, 45, whatever? Why was that the moment you decided to get in? What made you say, this price doesn't scare me, I can see it going up from here? Track that back to where you got that information and just think, like, was that good information? Was it valuable? Did you take it at surface level? Did you do research on it? Was it because 25 YouTube channels told you the price was going to go to 250, so you better buy at 60? I don't know. But the fact that so many people bought for such a short period of time and then immediately sold for huge losses, that's wild. I just earlier today, which actually prompted me to do this as well, saw that something like $3 billion worth of coins were bought almost at the bottom. I mean, think about how wild that is. People were waiting, planning for this. It's not hard to do. It's not a regulated market. There's not the level of protection for investors with other markets. It's probably coming, frankly, but it's not there right now. So all I wanted to say was just, please be careful. Please think about what you're doing, but don't get all of your advice from people you don't know who have nothing to lose if they get it wrong. I think that's a really, really big thing here. I almost start to wonder if we're going to start seeing analysts coming out in the near term, or maybe longer term, I guess, who are going to be associated with major banks, investment banks, hedge funds, etc. I think there'll be some self-serving piece of that as well, to be perfectly frank. But that said, maybe it starts to put some faces to the names with some accountability. What I really, really just, I'm a broken record sometimes, and I know that. But having been through the tech boom, the IPO bubble burst and the tech bubble, then, 06 to 08. And of course, after 9/11, everything happened. That was terrible. And then these recent couple of years of just having some troubles in the markets, like there's perspective that you have to understand that anything can happen. And there's always going to be a top and there's always going to be a bottom. And oftentimes we have no idea where those are. So looking at as much information as you can, as much data as possible, protecting your downside, which anyone who watches this channel with any degree of regularity, you have to have protection for the downside swings, especially in a place like crypto. Set stop losses. Use puts if you can. If it's not, I don't want you to use options if it's going to be complicated or there's risk there. But start to understand how you hedge, how you can use different strategies to protect yourself. Like, go and do some research right now. When Bitcoin crashed, what went up? Where did that money go? Now, I know a lot of people got liquidated, etc., but not all of it did. So start to understand what correlates with the crypto market in the reverse, right? Is it bonds? Is it gold? Start to think about that. Just this way you at least have some degree of a stopgap in place. Believe me when I say, like, I am all about the diamond hands. I have no problem holding long term. I plan to hold very long term. But that said, if you need that money to pay for college or your bills, or you're saving for a house or a wedding or retirement is coming up, you have to protect the money. You just have to do it. It's just smart investing. And it's about being safe and doing the right things, being mature and responsible with it. And I absolutely urge you to talk to financial advisors who get it. I think one of the struggles we've seen in recent times is I think a lot of people don't use financial advice anymore from licensed certified professionals. And I get that. I think there's so much information online that you feel very empowered to go out and to learn and to get it. But the reality is there are a lot of advisors out there who might be in crypto or could help you guide on that. And even if they're not in crypto, maybe having candid conversations around what portion of your portfolio should be in speculation, right? And be honest with them. Say, look, I want to be in crypto, but I also want to have a good portfolio that helps me get to retirement in case, YOLO doesn't work and I don't have a Lamborghini sitting in my driveway. I can still get there and be healthy and pay my bills and buy a house and take a vacation, etc. So honestly, I again, as usual, talk for way more than I meant to. But I just really want to get the point across here that there is a lot of information out there. You absolutely can use it. You should be using it. Treat it like an indicator, one of multiple points that you use to build your strategy and understand the moves you're making. Very rarely in the markets that we're in do you have to worry about rushing or being first or even being last for that matter. Just plan it out, right? Plan it as part of the overall portfolio. Because I would hate to think that people who bought in that 40 plus, 45 plus, 50 plus range lost all that money and now maybe goes back up and it was lost for nothing when you could have just held. Now, a final point I'll say, I know a lot of it had to do with leverage, so that's a whole nother ball game. But that being said, just, again, when you're playing with leverage, you have to have cash on hand. You have to protect yourself, and even more so while you hedge when you're on leverage. So anyways, hopefully you watched the whole thing, got some value here. I know I can be redundant and I know I can be repetitive, but it's not coming from a place of needing to hear myself speak. It's really from understanding like what happens in these markets. On another video, I'm going to talk about some absolutely crushing blows I took back in the day in Forex, just to give some perspective on things that seem very safe and very simple, but have no way of predicting what's going to happen. So I'll save that for another video. Good hunting out there. I hope you're doing well. Don't be scared by things when they go down, but do the research and understand why. So with that, have a great night. Talk to you soon.